Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about an announcement made yesterday, which underlines the full scale of this trade war we're going through. Plus, I want to also talk about how both the US and China are playing hard to get, and how the world's fifth biggest economy is suing the government, the US government, that is. And of course, a certain thing is shining very bright. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand for entering any trade. With that out of the way, let's get started. So, indeed, the chips are indeed down, because once again, the US stocks, and indeed the Asian stocks in the European session, are under pressure following Nvidia's announcement that following the trade war and the restrictions put into place by the US government to restrict exports to China of the H20 artificial chip, it will cost Nvidia $5.5 billion in charges. Now, this obviously has pulled Nvidia's stocks price down, made it negative. It was negative in pre-market, is now negative with the market open. Okay, negative with the market open. In fact, and we'll look at it in a minute, I'll bring it up to you. It's actually negative 6.33%. And at the end of the day, there is simply no hiding from the fact, because over the last couple of sessions, there was a little bit of a bounce in the market, down to the fact that we might, we'll see possible more delays in tariffs, or lighter tariffs on electronic goods. There may be lighter tariffs on automobiles, things of this nature. But there's simply no way around us hiding from the fact we're in the middle of a trade war. And we'll go more into that in a moment. But I want a quick look at the market as it stands, actually, and look at Nvidia, because I want to make a point about these the fact they're limited to, they can't sell this important chip of theirs to China. But anyways, pull up Nvidia now. As you can see, like I say, it's negative 6.31%. Okay. And like I say, you can see the big gap. They made the announcement after trading hours. And as you can see, it was a big drop. It opened with a big gap. But this is what I really want to have a look at. You have a look at some of their financials as well. Look at revenue. Okay. Now, as you can see, over the last couple of years, their revenue has been generally growing. Okay. Now, the purple line is China. Okay, it's China. And as you can see, over the years, it's from that section of the market which they sell to has been growing. And as of 2024, China/Hong Kong generated 17.11 billion to Nvidia. So this limitation, again, underlines A, for one, we're in a trade war, but B, there is something else more to it. We did a video a couple of days ago where we discussed this as well. Are we actually witnessing a new Cold War? Because there's more to it than just trade here. This is the case of the US government not wanting certain things to go into the hands of the Chinese as well. So there's more to it. But either way we look at it, it's been a negative effect to the market throughout. And we'll have a look at some of the other stuff in a minute. But I want to talk a bit more about this trade war. Because at the moment, it is still very much a tit for tat type thing. And it really is a case at the moment, both the United States and China waiting for the other one to call so they can start negotiating. Not one of them seems to want to be the one to make the move first. You know what I mean? They seem to be both waiting for each other to call them first. Now, China has indeed signaled readiness to talk with the US, but under certain conditions. And one of those conditions is they basically want a bit of respect. They want a bit of respect because they feel they've been treated very poorly by obviously the tariffs and all this, but obviously comments made as well a little while back by the Vice President J.D. Vance as well, what he said about the Chinese. I won't repeat it here. So they want a little respect, okay, before they start negotiating. And in fact, what they've done, they've actually appointed a new international trade negotiator because they want a person appointed as well, so they can do all the talking. So they're not going with this chap and that chap and it's getting all over the place. They want a designated person to negotiate with. And because of this, they have actually appointed a new top international trade negotiator. I won't pronounce his name because I will butcher it. I'm terrible at names, but Lee, I won't try and attempt his surname, is now the Vice Minister of Commerce and the top representative for international trade negotiations. So this guy comes with a very good reputation. So they appointed him to be head of negotiating. But really, it's a case of who's going to call first and give China, that's what the Chinese government wants, give them some respect as well. Because to be openly honest with you, now couldn't be a better time to start talking with each other. Yesterday, don't forget, I discussed how China has told all the airlines Chinese airlines not to buy Boeing because of this trade war. So it's very tit for tat. It's getting nasty. Even more so, rumors abound today, this is really sort of almost getting quite comical. If it wasn't so serious and it didn't impact the market as it does, it impacted myself and you. But according to rumors, there was a note or fact sheet going around the White House which says that China now faces up to 245% tariffs on imports to the United States as a result of its retaliatory actions against the United States. So it really is asking the question, where does it stop? Is China going to come back now and go, right, we're going to do 180%, and then the US is going to come, well, we're going to do 300. Oh, fine, I see your 300, we'll do 350. I mean, it's getting very serious. And like I said, if it wasn't for the implications this has on the market and on us, then, it would be comical. What's going to happen next? The US is going to go, well, I'm going to have a birthday party, invite everybody apart from you, China. I mean, it is getting a little bit that. But let's have a look before I want to move on to another story, which is, again, still tariff related, actually. Let's have a quick look at the market as it stands, how the US market has opened. Obviously, we've already had a look at Nvidia, and we can see that Nvidia obviously is under pressure. But of course, Nvidia is a very, part of the Mag 7. It's going to bring down the rest of the market as well. S&P is opened negative at 5,300 points, then down for the day, currently negative 1.22%. NASDAQ, which is of course the biggest tech, down negative 1.95% on the back of this. Let's look at the effect of the other Mag 7. Tesla today down 1.96%. Meta Platforms, or Meta, down again 2.56%. Microsoft down 2.8%, 0.8%. Amazon.com down 1.80%. Alphabet down 1.46%. And Apple, which had a boost the other day because they said they were going to be good on the loud smoke, not due to tariffs on smartphones and tablets and computers. That didn't last long. That's down now, 2.49%. So in general, as you can see, the market is not having a good day again, all because of Nvidia and because of one of you pick up the phone and talk to each other. Because of this is adding so much uncertainty to the market. And there's something else which is a headline today. Again, tariff related. I can't get away from that word. I really wish I could get away from that word, tariff word. But there's a big question here about obviously a split. There's always been a split, very diversified over the years because of politics in the United States. But there's something else which has happened today. The California governor, Gavin Newsom, says that his state, which is California, is suing to halt Donald Trump's tariffs, setting up a high-stakes legal challenge. So they're suing the Trump's administration to stop him using emergency powers to put these tariffs in action. Basically get him to stop. Now, they will file their complaint today at the San Francisco federal court. And like I say, this is to challenge Trump's emergency powers to enact tariffs against Canada, Mexico, and China. This is what he had to say. President Trump's unlawful tariffs are wreaking chaos on Californian families, businesses, and our economy, driving up prices and threatening jobs. Now, here's the thing. California, okay, is the world's 5th largest economy. Just the state of California is the world's 5th largest economy. So again, this is just adding more drama into the works of this tariff drama. More stuff. Anyway, I want to quickly, before I move on to my final topic I want to talk about, I want to do a quick currency update. Right, it's quite a nice little animation now. Jazz it up a little bit. Let's have a quick look, first of all, at how the euro dollar is doing, because it's still trading around obviously the three-year high. So still performing around there, still holding its own. It's a bit more range trading today. It's not a lot of drama. Something which I have noticed though is performing reasonably well today. If you go on a daily chart, you can see it. The cable, okay, is coming in. Holding its own at 132.46. Don't forget, yesterday we had UK unemployment as well, which was good, and we had a slower, cooler inflation reading this morning as well. So there's a lot of bets now that the Bank of England will likely in their next MPC meeting likely to cut rates, which hopefully will inject a little bit of life into the economy because unemployment is steady and inflation is cooling. So there is that. Now, obviously, there is the threats to tariffs as well. However, it's slightly different for the UK at the moment than, say, Europe and obviously China, because obviously, again, I don't know how much you could believe his words. But J.D. Vallance, the vice president, said there that the trade agreement between the UK and US is looking good. So there's a little bit of a boost on with the sterling at the moment. That's why it's trading at 132.481 against the dollar. I mean, as well as that, we are seeing dollar weakness as well. Don't forget. I mean, if you look at the the dollar index. Look at the dollar index. That's below 100 levels, 99. So As you know, the dollar index measures the strength of the US dollar against the basket of 6 major currencies. So clearly, obviously, it's under pressure on that. If I just want to have a quick look at the dollar yen, again, clearly illustrating dollar weakness, currently trading at 142.52. Okay, don't forget when we started talking about this, it was trading several videos ago, it was trading at 149. We talked about potential of the yen gaining strength. Right, there is one more story I want to talk about before we talk about some financial data. Yeah, we'll talk about data for a change instead of tariffs. And if those, of course, you know me or watched the show, they know I'm always going to talk about this, but we got to talk about it now. And that is, of course, gold. Again, the one thing truly benefiting with all this drama, with all this risk of uncertainty, is gold. It's almost like every single day, we're talking about gold hitting a new time high. You know, it was only like a week or so ago, it hit the important $3,000 level, and we all got excited. But since then, there's no stopping it. It's having such a good time. You know, it's having such a good time. And let's pull up gold and have a look. Have a look at it at the moment. Let's see where it is. I mean, it hit a new time high again today. Above $3,300 every day. Every day it seems to be hitting new highs. Currently trading at 3,000. Excuse me, I got too excited then. Currently trading at $3,311.47. I mean, it's just you know, it's an incredible bull run. Obviously this is really being driven by the amount of uncertainty we have on the market, the amount of uncertainty we've got. So clearly you can see this is why it's making the yellow metal shine really, really bright. Anyway, good for that. Some other data I want to quickly talk about. Of course, we do every now and then, we do talk about economic data. I remember the times when I was doing these shows, it was nothing about economic data like CPI, like NFP, like retail sales. But obviously that's different now because it's all about tariffs. But yeah, retail sales came in a lot better than anticipated, and a lot better than last month. It actually came in at 1.4%. February number was 0.2%. So it's a big jump up. Now, the reason for this is basically what they reckon or what they're thinking. It's really being driven by a rush by the consumer to try and beat the tariffs, which makes sense. If it's going to be more expensive in a few weeks' time, it's best to try and beat it now. In fact, car manufacturers, you know, they report a big jump in all the sales in March before obviously this 25% tariff on cars and car parts come in. So obviously this is what's driving the retail sales number at the moment. It'd be interesting to see what the next reading is going to be now that tariffs are indeed in place. Other news to come is, you know, it's a short week this week because obviously we have the Easter holidays or Easter break, but we've got one bit of news coming out tomorrow, which can be quite, you know, important to keep an eye on. ECB interest rate decision. They are expected to cut rates potentially, and more importantly, I think is going to be the press conference, because it'd be interesting to see what Lagarde says about the current climate and the current affairs with the trade war, etc. Don't forget, this is indeed a live show, so you can talk to me anytime you wish, or say hello, or share with me your opinions. Because that's the whole point about the live show, so that we can talk together, we can share ideas, discuss the market, thing like that. As well as that, don't forget, if you're watching me on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you like this sort of content and you put up with me, my enthusiasm, because I'm passionate about the markets, by all means, give me one of these. It's nice to know that you like what I do. And same if you're watching me on Twitter as well. By all means, give me a little heart if you like it, etc. As well as that, if you're watching me on YouTube or watching the recording, which I've noticed a lot of people go back and watch the recordings, which is great. If you have a comment or you have a question, you want to say something, you can put it in the comment section below on YouTube. I will see it and I will reply to it next time I go live on air, which of course will be tomorrow. Actually, about the ECB press conference is going to be interesting. Okie dokie. If there is no questions, not a problem, not a problem. Leaves me to say, okay, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.